So let's look at stacks here. Scott wants to see stacks. Yeah, I don't know, guys. The stacks has been my worst trade, I think, of a long, long time. But I mean, here's the thing. This was an excellent looking chart. Look at that trend channel we have. I'm not trying to kind of defend myself. I'm saying this because you should always hesitate to use always. You should almost always and usually trade it this way. Double bottom, double top, trend channel in place, came down. We were retesting prior resistance in this zone. That should have held. And I defend that trade recommendation. But it also is an excellent example of you have to have risk management. And I did, and I was I would say excellent. I exercised pretty good risk management, you know. Once this trend channel broke and rallied up and it became resistance, and we had that bearish candle, I was selling stacks. Not all of it, but about still half, right? And then it came down and then it pumped higher and rejected, hit a sell block. And I think I was out here, but I'd have to check. And so it's really important. And you know, we've chatted privately, some of you, I won't name names, about being lazy or missing stop losses. Again, I think those they're watching everything, you guys. They're saying, you know, when we're being diligent, setting our stop losses and all of that, sure, they might gun for them, but they also know we're being smart traders. But where I'm going with that is when we're playing loose and not having stop losses, you know, and there's more liquidity to go grab, I think that's a target for them. It feels creepy calling them, but have to get used to that's the age we live in. Machines, you know, are among us. And so, and I believe this year, I've been told this year we'll have AGI, artificial general intelligence, or whatever that means. It basically means prescient consciousness, you know, to some extent. There's a test for it. The Howey test, is that right? You know, not motions, but anyway, let's get off of that. Let's talk about stacks. Sorry, guys. So this thing, I'm not sure why this bled out actually, but this is why you have to be watching. You have to be saying at these prices, I'm out. It should have held here, but markets, we can't will them to be. They don't behave as they should. And what were the other signs here? There really weren't clear signs on the daily. Um, but you know, and these are things we want to watch too. When this became a pivot, and I didn't get it right away, but we have to be watching. Always just remember, always be looking for those two data points to confirm a new trend channel is forming. And so here we rejected, we had a sell block. This became a new trend channel to the downside. We had our TSI, we had our RSI weeklies. The signs were all there, but you know, look, it's not easy when the markets are busy. So I'm saying with you, not to you, not being trying to preach. Together, let's make sure we call each other out on those weekly RSI bearish divergences. It's such a great addition that Joe has created for us. All right, so with that in mind, you know, stacks at these levels should hold here. It's more of a support zone than resistance. It's way oversold. So Scott, I would Turing test. Thank you, KS, privately. Yeah, what's the Howey test? I don't know. We have too many tests. I got tested for patience once and I tested negative. So at least I know that. Here is so what did we do though, but by the way, and this is it's just, well, this is armchair quarterbacking for sure, but it's worth noting. Look at this big vector candle here, the midpoint, the fair value gap retested, And this one here, it's a tinier one, but we've just come down and retested that. So there's a case for holding and bouncing here, especially if we hold that doji candle. Any news on stacks? I should look at this. SBTC market cap increase, so that might have been part of it. Yeah. So that just it's so hard to keep track of all these things. When there are unlocks or when they add, whole increased market cap and dump a whole much more liquidity. All right. Well, that was SBTC, more liquidity in trading the stacks. That's probably what it was. Increased cap allows for far greater use, possibly enhancing value. Much depends on user participation. If it absorbs, it could positively impact stacks. Yet, but it didn't. Yet, if supply outpaces demand, any price rise could be limited. The event offers potential, but also risks needing cautious consideration. Yeah. Well, and it's impossible to keep track of all the news. So show me the charts. I'll tell you the news. The charts told us it's time to get out, and we need to get our confirmation bias out of the way. So again, the best thing we can do is learn from this. We had a couple signs here. Those bearish engulfing candles, really important. Look for weekly breaks. Look for RSIs. We had that here. Similarly, though, the last time we had a bullish RSI, bullish divergence on the weekly, back in here. So, when in doubt, sort of zoom out and see where did we go wrong, or what should we look for now? And that was dude, that was a 20x. Holy smokes. Man, we missed that one. But we weren't watching stacks yet. We'll be watching it now. So Scott, I would hold here. I wouldn't sell more. I don't see I think this thing's played out, and one thing we could do is bled out as much as it's probably going to. Let's put a Fibonacci on it. These are the times we can do that. Yeah, it's gone lower than I would have thought. Depends how you draw these. Sometimes it's an art and a science. If we go from here to there, yeah. I don't know. I think we've covered it a bit. Do I see stocks recovering, or would you move to something like Aptos? That's a good question, Scott. I think the downside is limited on stacks. I would think, see, stacks makes Bitcoin better, and as Bitcoin runs again, stacks will run again. In the short term, I would have some Aptos, but we know from VeChain, remember when we were talking, I said, don't sell all your VeChain here because then it'll rally and go up. Sure enough, it did. So this is not the time to sell stacks. Look at this doji forming on the weekly. Now, if you'd like to allocate into Aptos, you could sell half of your stacks and put it into Aptos. And that's the answer. But again, with that, trying to limit your coins, keeping it under 10-ish as the filter. All right, you guys, let's, yeah, sure thing, Scott. And these are, even though these are important lessons to learn now when accounts are maybe not in the millions of dollars or hundreds of thousands, learn these lessons now and be happy about that because I don't have an analogy for this, but the reason most traders fail in the long run is they start betting bigger and bigger. And then when the invariable drawdown or bad trade happens, I learned this lesson. I was way too heavy in stacks. I was like, this is the best chart I've ever seen. I mean, it's like, so I took a nice hit on stacks. I did. But that's my own fault. And better to learn it now versus if you had a million in the market and you were 80% or 90% in any one coin. Because these things happen. And as you bet bigger, the losses become bigger. And the psychology of it is, because I've seen this happen, you fight your way up. Let's say you fight your way up, get a couple of good lucky trades and whatever, and you get, let's say you grow your account to from 100,000 to 500,000 or a million or whatever. And then you're buying, instead of buying 5,000 of each, you're buying 25 or 50,000 of each. Okay. And then you get a drawdown and it's like you've lost, then it comes down like 250,000. That's a big mental blow for people. So they start revenge trading, betting bigger and doubling down and going all in. So that's one of the best strategies that I've heard and have seen that the the best traders use is paying themselves, taking money out of the markets, not continually putting it back in the trading account, not betting bigger. Don't do that. Because think about it, if you're betting bigger, then that next loss is going to be bigger on a percentage basis, and then your mind's going to mess with you. Best trader I know personally is an option trader, and he made like 20 million in COVID, and but he says, and he had a bad trade. He was down a million, went to Italy, and playing at the big levels. But he said, so now he says instead of betting bigger and bigger every time, because obviously the potential profits are bigger, but so are those potential losses. As he sweeps his account weekly, so he takes profits weekly out of the account, puts it in real estate, puts it in other things, so that he's consistently sort of trading in that zone where he's comfortable. And there's a lot to be said for that. Hey, this is Brett from Moonstream. If you'd like to learn more about our pro trading signals or our live classes every Wednesday or our Retire Rich program, go over to moonstream.io/start.